All right, welcome. Welcome to Liquid Sundays. Weekly market overview. So it is March 8th, 2026, and we are looking ahead for the week of March 9th to the 13th. We're going to recap last week. We had a risk off sell off driven by US Iran conflict headlines, oil spike, $91 on WTI, and weak Fed jobs data. S&P closed around 6740, down 2%. Nasdaq 22,388, down 1.2%, and the Dow 47,500, down about 3% on the week. The VIX closed at 29.49, so sharp 24%, 50% weekly surge. Elevated fear gauge signaling heightened volatility expectations amid geopolitics. So key levels to watch: support 6700. We held 6710 as we were looking to as we started to approach that 6710 area. So 6700 to 6600. Should we break down 6700, we're going to look for the next level down about 100 points, and obviously resistance 6800. We got a major gamma level there and 6900. So VIX below 25. Should it come back down below 25, we'll start seeing maybe a little bit more stabilization, calm above 30. We're going to see some risk off selling. So we're going to watch oil about $91. Supply disruption moves in the 10-year yield is about 4.13%. We're going to watch that for rate sensitivity. Key data and events for the upcoming week. Monday's China CPI, PPI. So we're going to watch that for global inflation gauge. Wednesday, March 11th, we have CPI 8:30. Usually we get a nice volatility candle during that time frame. And there's earnings. We have PPI on Thursday. Um, Friday, March 13th, UMISH, consumer sentiment, preliminary, Q4 GDP, second estimate, core PCE, and earnings highlights. We have Oracle early in the week, Adobe, HPE, Neo, UiPath, Ubrick, Coles, Tech, and Cloud Focus. So geopolitics and headlines, obviously, plus CPI reaction expected to dominate. So we have a cautious tone, and we're going to look at defensive and energy rotation, which is likely until some clarity emerges. So let's clean this up here. We'll remove that guy there. All right, so we have our weekly SPX candle chart here. You can see we are starting to break down this trend from Liberation Day. So after the initial sell-off recovery, we had a pretty bullish trend that was respecting this trend line here, and starting to break down a little bit. Still pretty sideways, to be quite honest with you. So if you take this from the level that we closed at on Friday, we are essentially unchanged since October, November. All right, so pretty much flat since that period. So lots of positioning, lots of consolidation in this weekly range here. This is the lowest weekly close on the year. So, we are technically negative on the year. And now we have to basically see if we're going to hold this, 6,700 level. You can see, very simple way of looking at this is we have, support here. And should we break down this support here, we're just going to look to the left here. We've got this week's candle, this November weekly open was around 6630, and then should that break down, the low of this candle here, which is the major trend line support, is 6521. So this is a weekly chart. Let's take a look at the daily chart. We'll just zoom in a little bit here, And you can see the consolidation a little bit more clarity on how choppy it's been, right? Choppy, 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 starting to kind of break down. Trend line, simple trend line, will tell you that we are at a crucial point here, right? For a bounce. So we really need to an early snapback early in the week for this thing to, let's say, generate one last kind of final push into maybe 7,100, 7,100, maybe 7,150, 7,200. Still not completely out of the question. I know it feels very bearish, but technically speaking, we have not broke down this level here. So we're going to look at that. And then if we start to break down there, we have just clear levels that we can kind of play to the downside here. If we take a look at the hourly chart here, we do have what looks like, upper trend line resistance. So if you just take a simple line tool, you can see that we've got resistance here. Okay, this little trend line that we can kind of monitor here, and then a little bit more severe here, starting from the end of February. We have to kind of get over that. And on the downside, you can also argue that basically this trend line on the hourly here has broken down, right? And these are our levels. Obviously, we're going to watch for support here. 67.10 is going to be kind of important here. So, but you can start making a case for you can start making a case for falling wedges or channel consolidation. Okay, it's not entirely out of the question for this thing to just kind of keep on going like this. So these are the things that I'm looking for constantly on the weekly, daily time frames, and then obviously down into the hourly. So we're starting to see a little bit of a. It almost looks like we are getting some market structure shift here, right? So it went from very sideways, still choppy, but starting to break down here on some higher time frames. So we will we'll look at last. Let's look at Friday. We'll look at Friday's action, and we can just analyze it. Wasn't uh, wasn't too bad. Um, Non-farm payroll is always a tricky day to play. Fridays in general, but non-farm payroll usually get a move off the data and then some type of reversal. We did see some of that, and then it kind of rolled back over. So I posted a little diagram in the Discord and on X, but I'll just go over it with you live like I always do, just to review. So we're all on the same page, understanding my mind versus the plan. How do I come up with the plan? How do I execute against the plan? Um, we're going to review that now. So I'll just take the plan and I'll just post it right on the screen right here. So here is the SPX version. Actually, something that was really I want to I'll do a couple things here. We're going to go over SPX, but I also want to bring up the SPY plan. I'll put the SPY plan because I know a lot of people like to trade SPY. Generally, I like to tell people, you can trade SPY versus the SPX plan and just kind of move to zero. It's not exact, but it's usually close enough for contract selection and for going long and short. But I'm going to I'll put the SPX chart up with the SPX plan, and then I'll put the SPY chart up so that we can kind of compare and contrast. Okay. So here's SPX. This is the US 500. So this just shows the overnight. You can see the Asian and the London session from the overnight SPX future sessions, and that's where I generally will grab my plan for the current day is from the previous two or three sessions, and it depends where we are in retrospect to where the previous day's action is, and it depends on if there's a volatility event, if there's data. It all kind of factors in. I get a lot of questions about how do you come up with the plan, and is there like a cookie cutter way to do it? there's not really, you can't really, sometimes you can take just the high and the low of the previous session, but it's not always that simple. So I'll just give you an idea of how I came up with Friday's plan, and we can look at the action, and then we'll just look at SPY. So let me just copy and paste this here. Here was my SPX plan that, let me see here. Okay. So all these plans, sometimes I post them on X, sometimes I'll post them in the chat, but daily, every single day, without fail, I do post them for subscribers in the alpha alerts. So if you're a subscriber, you get this plan um, every single day in the alpha alerts before the market opens. I try to give out some free alpha a couple times a week in the chat and on X as well, so people can follow along. So SPX day trade plan, March 6th, 2026. So resistance 67.95. Okay, so I'll just take my fib tool here, and if we look at the overnight session here, we kind of had some consolidation, and then there was this nice little waterfall in the London session here, and then at 8:30 we had our non-farm payroll. So what I like to do is after the on a volatility event, something like non-farm payroll, CPI, when the data comes out before the market, 8:30, I like to take the high from that um, that event or right before that event, which ends up being here. So I've got basically the support from the London session here, okay, becomes resistance going into the data, and then the data, we get this sharp decline, right? So I'm just going to take the highs from this breakdown of the London session. So that's where you get your 67.95 resistance here. So I take my fib tool and I take the top here of this breakdown, which is 67.95 ish. Nice round number. So I just take that, and then I will just wait until 9 o'clock, 9:15, sometime around before the market opens. I look for like some type of bounce, some type of support to develop. Okay, and that happens pretty much. This is a 15-minute chart here, so that happens right around here. So around 9:15, something like that, right? So you see support. If you look at the plan to the right, you see support at 67.31. So 67.31 is right about right here. So I'm basically taking my level there, and there is our range that we're playing off of. Okay, now I get a lot of questions. How do I come up with the pivot? The pivot is simply, 50% of the range that I am um, watching. So from resistance to support, 50% was this, 67, 63 level here. And you can see we pretty much on the SPX, we're kind of wicking off of that. We were wicking off that. We got like one candle that closed here at 1 p.m. And then a sharp kind of reversal right back down. So this level was a pretty accurate pivot on the day. We really weren't going to go long. I mean, um, you could have gotten faked out, if you were trying to follow, close at 1 p.m. But if you follow my mantra and my kind of philosophy, I'm usually not looking to take trades during the lunch hour. So I want to take trades from anywhere from 9:30, preferably 9:45, 10 a.m. to 12, and then I don't really want to trade the lunch. I don't want to trade 12 to almost 2 p.m. Okay, I like to look for trades that set up ideally in the morning, um, and then in the afternoon as well. I prefer the morning versus the afternoon, but that's the way I look at it. So your clearest, most momentous moves are going to happen for me in the morning versus, because I'm a momentum trader, so like I'm looking for momentum, and you don't get a lot of momentum during lunch. You usually get chop and you get reversals and lunch raids and all these things. So ideally, if I had to tell somebody to put them in the best possible situation on a daily basis, I would tell you to trade just from 9:30, 9:45 to 11:30, 12 p.m. That's it. Don't look for anything else. You get your move, you get your trade, you don't get it, that's it. Pack it in, pack it up. If you want to trade the afternoon, come back after 2, 2:30, look for some significant price action versus the plan, versus the levels. And that's going to kind of keep you, safe from the chop zone, from stuff like this. So, anyway, getting back to the plan per se. So this is a 15-minute chart. I usually frame all of my trades off of that 15-minute, and then when I'm trading, I do go down to the 5-minute, 3-minute, sometimes 1 minute, depending. But I really like the 5-minute a lot. I find it gives pretty clear signals. So if you were trading this and you were trading solely off the plan, you know, I can't tell you how many times, you come up with a plan and you look at it, and like when you're looking at it, intraday, and you're kind of questioning, oh, I don't know, is it doing this? Is it doing that? Well, the only thing you kind of have to ask yourself is, and it doesn't have to be my plan, it can be whatever plan you come up with, is what you're doing following the plan, right? Are you are you in tune with what is happening, or are you trying to predict what's gonna happen? The plan that I come out with is telling you that if price is rejecting off of 67.95, we're going to see our pivot at 67.63. If we break down below 67.63, we're going to visit 67.31. If we break down below 67.31, we're going to visit 67.20 to 6700. And you can see, I do this a lot. I just like to like take my, okay, just literally we'll just point arrows here. Okay, rejection of 67, rejection of 67.63, or break of 67.31. So this is easy, right? We're just going to go like this. We're going to go 67, 67.63. All right. Are we breaking down? Are we are we are we going down below 67.63? Yes. I'm going to enter short. Okay. That's there's no like, okay, should I bounce? Should I buy it here? Should I not? We're closing below here. I'm gonna basically follow the plan, and this is pre-market, but just give you an idea, I'm just basically gonna follow the plan. Am I below this level here? Am I rejecting off of this level here? Yes. Am I basically like, um am I buying calls on this move down here? No, they say never catch a falling knife. So I mean, you can see here, below 67.63, and this thing goes right down. Here's basically the support here, and then, breaking down below 67.31. Okay, we're going to visit 67.20. So there you go, right down to 67.20, and then I had 67.10 on the bingo card because of previous support from earlier in the week. On Tuesday, we had a support at 67.10. So those of you that were in the Discord and were following along, I said, if I said, I was joking. I said, if we don't hit 67.10, I'm going to close the Discord down. And luckily, we hit 67.10, so I didn't have to close the Discord down. Now, on the you can see here below 67.31, take profit 67.20 to 6700 in that range here, and then trailed on to 66.80. We didn't hit that, but you're looking at, your risk versus reward. So I'm basically shorting below 67.31, and then stop loss, 15 to 20 points above that. Now, something that I want you to be aware of is that if you're not following this risk versus reward ratio, and your trade doesn't fit that, no matter how good the setup looks like, you shouldn't take it. You should only take it if the risk versus reward is you're risking one to make at least two. Okay. Because you can be right 50% of the time and make money this way. But if you're doing one for one, um, you're going to lose money over time because your risk reward isn't set up properly, right? Okay, so there was some short setups right off the open there, beautiful, and then obviously there was some, a lot of chop or whatever, but long reversal. Okay, let's just look at long reversal here. Now reversals are always going to be, when you're playing counter trend, they're a little bit more difficult. So I think it's easier to go with the trend and try to figure out when the reversal is going to happen. But something that I talk about a lot is when you're looking for a reversal, look for wicks off of a key area, right? So wicks off of previous support, and then look for a bullish engulfer, right? We got a bullish engulfer here, so basically, you're going to tell yourself, I'm going to go long off of this candle here, and I'm going to put a stop below the support there. So this trade here, let's say that you're reclaiming 67.31. Let's say you get a close here. This is a little bit unnerving because you did have. I'm just going to zoom in a little bit here. So you had to break up above a bullish engulfer above 67.31, and then you have another reversal candle here, which is like an inside bar here. You see, these are 5-minute candles. So a little bit nervy if you try to long this here, right? So that's what I mean about counter trend being difficult to play, because you do get whipsaw moves like this, and especially when the VIX is high, you're gonna, you know, levels are definitely more. The higher the VIX goes, the more of a suggestion the level is versus a kind of solid basis. Okay, when the VIX is under 20, 18, 17, 16, the levels get respected a lot cleaner than when the VIX is high. Okay, that's why volatility is such a it's a beautiful thing for traders, but it can be difficult if you're not used to trading high VIX environments. So but let's just say you did go long off of a reclaim here. You have to set your stop. You have to understand that, okay, I'm going to go long here, but if this thing breaks below 67.10, I'm cutting this thing. If I get a candle that's closing below 67.10, I got to get out of that. Okay. So if you're longing 67.31, okay, your target is going to be the pivot. Okay. So long reversal, entry bounce, 67.31. You can see it right here. I mean, this was written before the market came out, before any of this stuff happened. So entry bounce 67.31 plus reclaim, 67.63. So 15 to 20 point stop loss. Take profit 67.63. So if you longed 67.40, let's say on this candle close, you say, okay, that's a bullish engulfer. I'm going to take it. You're going to target, 67.63. So there's 23 points. So if you're targeting, 23 points there, I mean, you have to weigh out, is the risk versus reward going to be worth it? So I'm gonna, basically, I have a 30. The answer is, quite honestly, on something like this, if you were going to close, um, if you're going to set a stop on this, okay, if I'm targeting 23 points, um, I have to make my stop at 11 12 points, something like that. So, or let's say like the low of this candle here, is 67.20. I mean, you can definitely do that, but I just want you to understand that you're basically risking 20 points, so you have 20 points of drawdown, all right, to make 23 points. If you set your stop here, okay, if you set your stop here, your risk versus reward is upside down. So while this is amazing and it did, what we anticipated to do on the reclaim of the levels here, um, you you have to potentially think that maybe this isn't a great risk versus reward setup. Am I risking 23? My stop is 20 points. So these are all things you kind of got to weigh out. You kind of have to know ahead of time, whether or not it makes sense. So reversals are more difficult to play. I will say that It's easier to almost like fade, you know, you fade the move in the direction of the stronger trend. So, it was easier to honestly fade this thing back off of this level here than to try to play the bounce that never happened. Okay, this is US 500. So I want to show you SPY um, because it's interesting to see how the SPY plan price action reacted versus the SPX price action. Okay, and it's honestly going to kind of blow your mind, I think. So let me just put the SPY plan up here. Everyone with me so far? Everyone enjoying? Everyone understanding? Can you hear me okay? Is everything coming out clearly? And is there any questions up until this point here? Let me grab the SPY plan, wherever that might be. There's SPX. Here we go, SPY. Here we go. Copy. Okay. Paste. All right. Let me check the chat here. Hold on a second. Morph, do you always wait for a confirmation retest after breaking a level? The short answer is no, I don't. But I think that it makes sense to. But I think that I believe, that the people that are most probably consistent and profitable and successful are literally just kind of just turning off all the noise, just literally like just okay, I got a candle or two closed below a level. I'm just going to take this, and the risk versus reward is proper, and that's it, right? So you can play it both ways, but you have to understand that the only thing you have to understand is if you don't get a retest, sometimes you don't get a retest, and it just keeps moving in the direction, and then you just don't have then you just don't get into the trade. I mean, ideally, yeah, it does go back, it retests, you get nice long wicks off of it, fair value gap that displaces the support, and then there's more confidence in the play. But you can do it both ways. I just think that if you don't wait for the retest and you're kind of watching the price action, um, it just becomes a little bit more of a nervy trade, I feel. So all right, so let's look at SPY here real quick. All right. So this is the same exact chart, but with the SPY versus the SPX here. And this was we don't see obviously the Asian session on the SPY. We see data starting at 4 a.m., but irrelevant because versus our plan, I was only looking at basically the breakdown of the London session and the support before the open. So same thing. I'm going to take my fib tool here, and I'm going to take our, you can read along right with me. So resistance at 67.95. So 67.95 is right around, yeah, where are you? Right around here, something like that. 67. I'm sorry, 679.5. So you're right about here. Um, and then support is 673.1. So 673.1 is, where is it? 673 dot, we'll just say right there. Okay. This is a little bit clearer. Um, it is kind of eye opening that on one chart, let's just say like, and that they're basically mirroring each other with the SPY and the SPX, but look at the pivot here that we had. So Our pivot is 676.30. This is something that's really beautiful. Because if you were watching SPY, you could have literally just like shorted the pivot there, right? Like this thing like came to the pivot like it had eyes. Um, so entry short below 676 point 3 or break of 673.1. And you can see that price comes right back up and just got wicked. Even that big that 1 p.m. candle there, it came right up and it never closed below the pivot there. So you would have, if you were watching SPY versus SPX, you would have never thought to go long, because there was never a break. There was a reversal potential, obviously back up to on a reclaim and back up to the pivot, but um, you never really had any really bullish bias, because we never got back up above our pivot. And then on the downside here again, not that, sorry. On the downside here, the extensions you can see, um, where that kind of lines up. So anyway, SPY was a little bit clearer. You know, if we look at a 5-minute chart here on SPY, you do have big order block, and basically price was coming up here, and this is like significant price action um, versus the plan. So price comes down, hits targets to the downside, reverses up. You can see there's a bullish order block here, and then you're basically taking from the target down. Let's say it was SPX 67.10. You're going to trade that back up to 67.30, 67.31, and then once a reclaim of 67.31, you can trade that back up to the pivot, right? But that was mean reversion reversal, after we had come down and hit our targets. Something that I also like folks to understand is when the market gives us, you know, some of these clean moves, and we hit targets, within the first 2 hours of the day, I can't ask for too much more. I can't try to predict what's going to happen after we hit a lot of those targets, right? So I have to say to myself, and whether I got in or whether I got out, did the plan hit my targets? Did it go where I thought it was going to go? Yeah, okay. I get a lot of, hey, where do you think it's going to go now? Where do you? I'm like, honestly, all I can do is look at my plan and say, are we respecting my level? Is it not respecting my level? Is it above or below a support? How close is it to my support or my resistance? And am I getting wicks off of that level? Is it not respecting that level? These are questions as the day starts getting a little further out if you're looking to trade. But put yourself in the best situation possible. In my opinion, I think that you have your plan, 9:30, 9:45 to 10, 11, 12, lunchtime. Unless you're good at selling premium, usually stay away. Come back after 2:30. Look for a significant price movement. You know, I mean, if you were going to trade this in the afternoon, you can see that there was like nice. There was equal highs here and a rejection. You can see there's a nice 5-minute bearish order block, and you can see the market rolled kind of right back over into our support level and then down below, right? So this did work again, in the afternoon, but if you look here, it wasn't very clean until after 2:30, and it's not always very clean after 2:30 either. I prefer the morning. I always prefer the morning versus the afternoon. The afternoon can be a little bit choppier. So anyway, all right, so there's our SPX and SPY review from Friday. Hopefully, I hope it helped you stay on side, make some money, or learn something. So there's that. let's see. Do we have any questions going forward on that stuff? I can address some of that stuff now if you'd like. I'm going to actually end the Liquid Sunday presentation SPX review here. And we can just look at some charts and stuff like that going forward. So stop that now.